Good morning. It is August the 4th, 2016, and the Bank of England cut its interest rate by 25 basis points and increased their QE purchases, $60 billion. They've cut their growth forecast to plus 1.8% versus the previous plus 2.3% because of Brexit, and they see inflation lower. Obviously, these guys don't go to the supermarket, don't rent either, so, or buy drugs, legal drugs, prescription drugs. Everything is going up. I've seen a lot of people think inflation, the real inflation rate, is pushing 7% now. And if you go to the grocery store or buy anything that's not manufactured, that's grown, etc., that you have to buy, like prescription drugs, you can believe that. So treasuries are up, gold is up, euro is down, as you would expect, because I guess the European Central Bank has to do something in response. Equities are higher because more QE, more support for the markets. So the relationships are, as you would expect, off that type of announcement. Crude was up, then it was down. I don't know why crude was up off that news with a cut in growth forecast, but it was. So maybe it rallied with the stock market. Hard to say. So the news is in. The market reacted. We got up to the top of value. And right here we sit. So we got this high volume area at 25. We got the breakout essentially from 20. So our first little round of support right here, 20 to 24, buy one. 17 to 13, buy two. On the sell side, 28 to the buck. Then 3 to 7. We have non-farm payrolls tomorrow, which tends to hold the market in check. Jobless claims, 265. Factory orders, minus 1.8%. That's not the stuff of bull markets, but the market will see that number and say, gee, the Fed's got to continue to stimulate the economy. They can't raise interest rates. They have to, maybe even a QE4. And crude, not crude oil, but natural gas, plus 3B. So the focus is factory orders, number one. Number two, jobless claims, in the direction of the stock market. Tomorrow's non-farm payroll number, they're looking for 185. ADP was forecasting 165, came in at 179, so tomorrow's number could come in at about 200,000 if there is a relationship between the two. Some people, I think there's more relationship than the financial press gives credit for, because of the switches that were made in 2012. ADP got in line with the Democrat Party with their forecasts and all that good stuff. Frank Lautenberg was the chairman and owner of ADP, a Democrat senator, and made sure his company toed the line. Yeah, it's the reaction that we had in treasuries and financials is, they expected a 25 basis point cut, and I guess it's the rumor fact, the reality of it, but it's a pretty strong reaction. Well, right now we're at 72.19, 73 even. So we've got 24, 28 where the volume is. I'm guessing resistance 1 is 28 to 73 for 1, so 3 to 7, sell 1. Take out the highs, 15 to 19, sell 2. Puts us in this area right up there. On the buy side, we broke it out from 8 So we'll put the first little band of support at 12 to 16 because the news is supportive for treasuries. And we'll make buy 1, 5 to 9. And then 29 to 01 for buy 2. We'll put the buys a little bit closer. Okay, gold was selling before this news came in. It's almost like the news was a surprise, but I was surprised to see that kind of reaction. Oh, come on. There we go. Well, the news came in W. And we've got some retracement going on right now, so we'll put sell 1 68 to 70. 73.75 for sell 2, that is resistance. On the buy side, 60 to 62. And then 55.57 where we were last night for buy 2. The euro got whacked off this news, and again, the pound to the euro is lower, but you'd have to feel that more will be forthcoming from the ECB, which means they'll have to print more or borrow more money to keep their social spending going, and they're not going to jeopardize that. So there is the news, and we're lower. We're right in this high volume area. So our first buy will be 25. I think we can go a little bit lower. Then the buck, 111 even for buy 2, plus or minus. On the sell side, 50 to 60, sell 1. 70 to 80, sell 2. Looking at crude oil, our trading vehicle this summer, crude oil and bonds have been much easier to trade. E-mini has been tough because of the lack of volatility. They won't let that market sell by much. We're in a 20-point range, and quite often we deal with 6 to 8 handle ranges for the first hour, hour and a half, and that makes it tough. At least on crude oil and the bond, we get some movement. So right now here on crude, we've got a break at 40.80. We're at 40.69, so selling 75s to 41 even, sell 1. 41 and a quarter, 41.50, sell 2. The buy side, I think we're probably head a little lower, so make 40, 40 and a quarter, buy 1. And then 39.50, 39.75, buy 2. Lean against this area right down here for our second buy. Okay, the E-mini. The Bank of England's move again shows G20's commitment to higher stock markets, or at least sideways stock markets, buy stocks. It is supportive for equities. Don't know if it's enough to break us out of this range with tomorrow's non-farm payroll number. Probably isn't. So resistance starts at 21.65 and it's over at 21.78. So 64, 69 is going to be sell 1, 74, 77 sell 2. On the buy side, 55, 57 still looks reasonable. Then 50, 52. So basically trying to buy 50s to 55s and selling 65s to 70s to start out. The news is supportive, so may have to get a little more aggressive on the buy side. 265. Jobless claims, factory orders minus 1.8. And again, in normal times that would take the stock. In normal times, the stock market would be a lot lower than it is now because of the. Even though they keep their earnings per share pumped up, revenues are down. All the statistical measures underneath the surface of the market are showing growth slow down or outright contraction. But these aren't normal times. And natural gas inventory is up 3. Okay, it's going to take a bit to get everything up and posted. I'm going to get busy on that. I will be back with you as soon as possible.